Hello guys, welcome to another backtesting video. As I am backtesting the data of September and I'm looking for, I took a trade obviously, that's why I want to show you. I want to journal this trade for me and also show it to you guys, why I took it, what I saw, and the higher time frame bias, the lower time frame, everything. Okay, so please watch the video till the end if you want to learn something, and if you learn something valuable, please hit that like button and put a drop a comment in the comment section. Okay, so now in GBP USD, let's start from the daily time frame because it's a obviously we are intraday traders, so the weekly bias is bearish obviously. So now on the daily time frame, after seeing Tuesday, Wednesday, Thursday, Friday close like this, all of a sudden we don't want to buy, right? It doesn't make sense to buy because the bias is still bearish, right? And also this Friday's candle closed as a bearish pin bar. So now we go to DXY to compare the bias. On DXY we can see a bullish pin bar, so clearly it's aligning with our bias. So now what we will do, we will look for sells in GBP USD, hence we will look for buys in GBP USD. So now let me show you the 4-hourly time frame. On the 4-hourly, the market is literally making lower highs and lower lows. I see the market structure in the 4-hourly. So now I can spot a supply zone here, but this is a little bit of accumulation, right? And our strategy is based on accumulation, manipulation, and distribution. We want to be a part of the distribution, yeah? So we can also see the market is clearly trending down. There is a supply zone here. This supply zone will be the most valid supply zone, as there is also a very, very good fair value gap and also a market structure shift here, and it's with the bias. So now we go to the hourly time frame. I mark the supply zone on the hourly time frame. Before the Asian range opens, I only marked the supply zone on the hourly time frame. This was the main zone that I was looking to trade from. This was a strong supply zone because look, it had a fair value gap right here, right? It had a fair value gap. It was with the bias. That means we are looking for sales, and it's a supply zone, and the market is bearish. And also it gave a market structure shift, so it was a very, very good supply zone. And also one thing, when the market, it was a Monday trade, so one thing, when the market was opening, the previous daily low and weekly low was so close, so we also have to keep in mind it can go and sweep the previous day low and week low first and then go to up. That doesn't mean that we will change our bias. Okay, it only means that now instead of targeting the previous week low, we will target this low right here, the new low that was made. Okay, and also here on Friday we can see there was no supply zone here, and this previous daily high has swept all of this liquidity. So also this trade was literally based on liquidity sweep. Let me show you why. Okay, the market opened huge gap up, or also you can say the market opened huge up. So it is a very, very good sign for us because the previous daily low is not taken. So the initial target, so it's an A-class setup. Still, it was Monday, not an ideal day to trade obviously. And also now the daylight savings is on, so our Asian range starts at 4:30 instead of 5:30. We also have to keep it in mind. And obviously now we are backtesting September, so it's not November yet. In November the daylight closes and the market goes to normal. For me, that from November period, that is normal because I have started trading from there. And from March the daylight savings is on, and that's why the market goes 1 hour backward. Okay, so we have to add up to that. And now let me show you quickly DXY was also aligning with my bias. There was previous day low here. I wanted the previous day low to get swept and make a move from somewhere around on the hourly time frame. There was a demand zone here. I was looking for a move from a zone something like this. Let's see if we will get the move or not. Or also you can argue that this demand zone right here, overall this zone. Okay, so now we go to GBP USD, and on the 15 minutes time frame, look for sells. Okay, so what I did, the Asian range literally took the previous day high, so the Asian range swept so much of liquidity, so it made sense for me after sweeping so much of previous structured liquidity. And also I'll show you, it made sense to go down, man. It made sense to go down. And also it was a very huge Asian range, as I will show you now. It was a 50 pip Asian range, so it was not ideal day to trade, but even though we traded. And also the order block that I've marked on the hourly was made on New York session. here in New York session. So the order block that are made on New York session has higher probability of getting a move on New York session. And also this order block was made on Wednesday last week, but it is getting a reaction Monday this week. Also, those things are very important. I have noticed that the order blocks that are made last week can get a reaction next week. Okay, so also you have to keep that in mind. And here, so much of inducement, you can see. First, after the Asian high sweep, first move was here. I didn't took the trade here because it didn't make sense. I was not induced. This position was induced. One inducement. Just count it, how many times we got induced. Once, and on twice I would have taken a trade here, but it was a fair value gap trade here. As you can see, it was a H1 fair value gap trade. So I don't like taking trades from fair value gap, so I would not have taken this trade. And if I had taken this trade, it would have been a break even. Okay, so the position got induced third time, first, second, and third time. On the fourth time, now according to me, this order block that I've marked has been mitigated, and on the hourly, this fair value gap, beautiful fair value gap has been filled. And also on the 4 hourly, there was a very beautiful fair value gap here, which got filled to the T, and this hourly fair value gap got filled, and the order block got mitigated. Okay, after seeing all of that, I took a trade somewhere around here with a 10 pip stop loss, targeting a 1:3, and it was a winner. As you can see, it was also a Fibonacci retracement OTE entry on the M15, but we didn't took that because if we are confident in our bias, then we take the trade directly after the change of character. Understand? Yeah. And also, when we will get a Fibonacci entry, to be honest, we get an intuition feeling because now we are experienced in the market. Okay, so it was a beautiful trade, and yeah.